Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in, take a look, see what's going on today. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, looking for investment opportunities and sharing those opportunities with everyone in the community. I do cover a wide range. It's mainly in commodities because that's where I think the value and the opportunities are. I cover iron ore, silver, gold, energy service companies, oil and gas, uranium, uh, copper, basically anything to do with commodities, lithium, some of these other areas that are kind of on the edge of all this stuff, of steel and all this other things. Where there's large potential, I'm usually trying to find the big asymmetric opportunities where there's a ton of upside potential and then getting really early entry points to ride the entire bull market with. That's basically what I do and the strategies I deploy. If that sounds interesting to you, special is a coupon code that you can use. You can get 50% off the first month only on a monthly membership, and a $100 discount using that coupon code on the yearly membership. You can always swap from a monthly to a yearly if that's what you'd like to do. I'm going to go past the first two here. So SILJ, as mentioned 45 days ago, breaking through that big resistance level. You've heard me say this before, that this was going to be a launching pad. Well, there's your launching pad. We are launching from the pad, so to speak. How did I know it was a launching pad? Well, I didn't know, number one. Number two, I thought it would be a launching pad because of the 45-year cup and handle in silver. And if you launch from such a large, big base from silver, that this was going to be a launching pad for SILJ. Now, we have a long ways to go, guys. I don't know if we're going to get a retest move here. We could, where it retests the breakout. A lot of people are saying, oh, the relative strength indicator is overbought, or this is over this. I'm not worried about that. When you have patterns this big, you throw the short term market analysis in the garbage. Like, I'm just speaking from experience. I've been here before and I've missed the train, last bull market. Now, I'm equipped a lot better this time around than I was back when I was a brand new, fresh investor coming out of college, and entering the market with absolutely zero knowledge. Right at the beginning, or I was in the middle of the last commodity bull market in 2004 is when I was watching it. We're more towards the beginning, in my opinion, of this bull market, and we're just starting to break these patterns. It it's not about calling things correctly. It's not about having to ride through a 20, 30, 40, 50% correction even. It's when you go through the bull market and you look back, how much money did I make from it? How did I take advantage of the situation? And what I'm going to guess is that if you try trading this, you're not going to walk away and look back with as large of a portfolio as you would have of just buying and sitting and riding through the big move here. These are big patterns. They've taken a long time to basically form. And when you break these things, sometimes they can go up rather dramatically. So I'm not stating that I know what will happen. What I'm stating is the patterns and the opportunities are very large, and there's a lot of ways that you can mess this up. And it deals a lot with not being patient enough and trying to play the short term. That's where I think a lot of people are going to mess it up. Here's one. You are what you cultivate when no one is watching. What you do in private always shows in public. Reading shows in conversations. Your workouts show in your physique. Your diet shows in your energy. Your discipline shows in your confidence. Your focus shows in your results. You are what you cultivate when no one is watching. That's a pretty good one. I like to think that I am highly disciplined in all of this. I'd like to think. So that's good. Here's another one from Peter Lynch. It says, the true contrarian waits for things to cool down and buys stocks that nobody cares about. I'm getting a lot better at this the past, I'd say, 3, 4, 5, 6 years. If people are responding to you like this thing hasn't moved in 14 years, why would anyone buy this? You're probably on the right path. I only buy stuff that nobody cares about. I call it ninja buying. Ninja buying is when you go in there, you buy stuff when no one's looking. And that's the same thing as this quote. Nobody cares about it. No one's looking. And that's where all the money's made. Once you figure that out, once you dial in the right sequence of numbers, the AKA the code, when you find the correct code, you unlock the code. It will give you the gains that you're looking for. But here's the thing. There's a couple of things that you have to adapt in order to unlock the code, and that's being a contrarian, buying things when things are cheap and nobody cares about it, and then being patient enough for the opportunity to mature. And I'm going to keep saying this over and over and over. I mean, that's really the trick. The trick is to just go around looking for stuff that no one's talking about. It's an absolute horrible business model for YouTube because all the stuff I want to buy, nobody is searching for, which is really bad because if you're a really good investor and you're deploying these tactics, you're not going to get any views. And a lot of people, they're going to say, oh, well, this guy's good because he must be good. He's getting a lot of views, whoever they're talking about. And that's not necessarily the correct reasoning, in my opinion. Sam says, so I was kind of interested in this. I was reading this. I'm going through this right now. So this is a cool little deal here. It says, what's the difference between 10 million, 100 million, and a 1 billion lifestyle? He asked the question in the Hamptons Slack community since we have people with a net worth between 10 million and 2 billion. Here's a few takeaways from 50 plus replies. So when you have about $50,000 to $100,000 in liquid money, this is the first I feel rich for many in the 20-year-old age group. Bills stop hurting. You can breathe. A 1 million net worth rarely changes anything. In high-cost cities, it's just comfortable professional. Still very income dependent. So if you've got 50,000 to 100,000 liquid net worth, it gives you breathing room. That's about it. And even if you have a 1 million net worth, you still don't have enough cushion. A 10 million liquid net worth, it says this is the first real unlock. Safety net feels permanent. You stop looking at the right side of the menu, the cost of things. Business class by default, 5-star hotels when you want it. You can cover friends' flights to make trips happen. Life doesn't run you anymore. 20 to 25 million liquid net worth. I can spend $50,000 a month forever and still compound. Nicer primary home or rent ultra nice, fewer ownership headaches. Staff for convenience, nannies, cleaners, stuff like that. Family support starts to be normal, not splurge. 50 million net liquid net worth. Cash flow is thick and hard to fully redeploy. Second homes, extended travel, serious privacy planning begins. You're learning trusts, tax vehicles, and who to not trust. At 100 million, Life becomes frictionless. Fly private often. Some buy, many rent because ownership is work. Full household team and executive assistants and specialists. Family offices, capital allocation becomes a job. You choose projects, problems get solved without you. Past 100 million, personal lifestyle doesn't change much. Scale and privacy do. Land for privacy buffers, private gyms, courts, spas at home. You'll never fly commercial unless you want to. And 1 billion net worth, money becomes institutional. You never see a bill. Global properties, fully private travel, governments, universities, and CEOs, they court you. It's legacy season. Foundations, endowments, monuments. A few real anecdotes from the thread. A billionaire bought a pro sports team mid-flight on his jet. His right-hand guy became COO. A friend group dropped $200,000 to $300,000 on a yacht week just to get everyone together. Multiple members set up dual family offices, JPM and independent, to manage life and investments. The biggest trap everyone warned about. Coming into money without accomplishing anything is a curse. A lottery winner, energy breaks people. Purpose over purchases. Cash flow over net worth, psychologically. Even people with 50 to 100 million feel poor during low cash flow years. Meaning, even if you have a high net worth, if your business income goes away, even if you don't need it, it feels horrible, mentally brutal. What actually brings joy at scale? Buying back time, coaches, chefs, pilots, concierge, funding memories, fly the whole crew, pick up every tab. Being present. One member took a year as a stay-at-home dad, wouldn't trade it for anything. What gets old fast? More stuff to manage. Identity tied to net worth. Chasing bigger dopamine toys instead of deeper meaning. Health, family, service, and community. Okay, that's it. That's my Chat GPT summary of all the replies of going through making this type of money. We'll see what I feel like when I go through this. And I think I'll go through this here pretty soon as we go through this, and I'll let you know how I feel. David Bateman says, it should be beyond obvious to everyone by now that the deep state is behind Bitcoin. A corrupt government doesn't promote an alternative currency they don't control and aim to enslave you with. Buying Bitcoin is a monetary Stockholm syndrome, a honeypot to lure you away from real money. Palantir can't control you with physical precious metals currency. The pathway to hell is paved with digital money. Resist at all costs. I like it. I think he's closer than what most people think. That's what I think. I think he's right on the money, and that's why I don't want to use it, because they can control it. Here's the gold-silver ratio. It's a bear flag target price for your information, much, much lower, where silver could start to really outperform gold. Now, gold, I think, is going way higher. So we're going to be running at a 2x clip of gold, perhaps, for this ratio to go down. So if gold's going up 1x or 2x or 3x, we're going to 2x that 3x, which could be a 6x or a 4x, whatever it is. So there's the ratio. It's probably going to head lower. We are in a certain portion of this bull market where silver and probably platinum is going to kick off, and oil, it's all going to come. Gold's our leader. It's already been running. All the rest is coming. Gold Ventures, interesting to see silver overlapping my drawn pattern, firmly on its way to his $77 silver target. Added a second path that is more likely with a multi-week shakeout around $50 an ounce. Now, a lot of people are trying to guess this movement. They're trying to predict the movement. I'm going to tell you this. No one can predict it. We can take guesses. Silver can move massively in very short periods of time. So I'm not here to try to predict it. I just want to capture the move. And if I can get up there, and if we go to $77 an ounce, guys, I think these companies that we are in on the website are going to go ballistic. I mean, we already are seeing very good moves in the companies that we are in, but I think it's going to go like crazy, crazy. And a lot of people haven't experienced that, I don't think. Some people I see on the Discord when we're talking are experiencing their first 10 plus baggers in some of the uranium companies that we are in. And then I think they're starting to experience almost, 5 to 10x moves in some of the silver junior companies that we're in. So that's good. It's good to see people get excited and have fun investing and seeing how it works, how it plays out. Now, there's other opportunities right now that people aren't talking about. They are becoming less, obviously, as these things start to move. You have less and less opportunities left, but there are some that are still way down that are early, and you could still get 10 plus baggers out of those, I think, throughout the bull market. A true silver bull market won't peak until junior miners significantly outperform the seniors. So that's SILJ divided by SIL. We are still early, and I agree with this. The juniors are going to outperform at the later stages of the bull market. And right now, they're just starting to turn against the senior miners. We're still early, guys. Now, again, there are people trying to time the short term here. It's not the right time to be doing that, guys. The right time to be doing that is when you're in a chopping market going sideways. When you're breaking a 45-year cup and handle, you want to capture the move. You don't go from short-term trading on a gigantic chart that is about to bust with a whole bunch of banks that are short the metal that could all get short squeezed to the moon. This is about riding. This is about getting on the train and riding the train up. And if we take a couple detours along the way, that's okay. We're early still, so here we go. We're going to get moving. Grady says, take a long, hard look at what proxy chart and why, because it is your true ticket out of the rat race. Fortunes will be made. Underestimating this chart is not a very good idea. AG, which is First Majestic, is bottoming versus NVIDIA, and the chart is now trying to break out from a reversal pattern. It means that First Majestic will outperform NVIDIA from here. The charts never lie. Take notice, act accordingly. The black around the apex move is coming. Have been posting this chart for a year saying it is bottoming. Now it is trying to break out of the pink triangle reversal pattern. And many are now copying this and doing versions of this chart. Huge asset paradigm shift towards hard assets is incoming. Here it is. We are now breaking out of some of these things. We are partaking in some of these companies too. This is looking good. I think we already went over that. So I'm going to go back up here and go over the top one real quick. Spencer says, home prices need to fall 40% or incomes need to rise 60% just to return the housing market to 2019 levels. It's a generational crisis, in his opinion. That's not what happens when you're short homes in a lot of areas. You have to price the medium income out. But I like the response here from Smart Real Estate Bets. 2019 and 2020 was a generational high in housing affordability. Costs were at an all-time low. Continuing to act like that should be a baseline expectation is misguided and not at all constructive. But you know what? It gets clicks if that's all you care about. And again, when you compare to the generational low of or the best affordability in history, you need to go where the average is, and the average is right where we're at. So a lot of people think, oh, well, it was cheaper a couple of years ago. We're not going back there, guys. It's done. We're not seeing those interest rates again. So I think the affordability is going to be worse than it was before. And I don't think we're going to go back to that. And I agree with him, this guy here, Smart Real Estate Bets. But that's all I've got for today, guys. So I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Special, it's a coupon code. And that's all I've got. So we'll catch you next time. This is Finding Value.